a super short video for you to find out what is better. If you need about $50,000 just in case something happens, the family has something on hand, what is it better, to save it or to have a $50,000 insurance? Let's say that you're in your 40s, maybe 50s or 60s, and you want to know if it makes sense or not. So let's take a look. So let's take a look at the numbers. We're going to use the example of Joanne Wells. So it's a female here, and she's either 40, 50, 60, so you can kind of see yourself in one of these situations. And the monthly premium that I was able to calculate for a 40-year-old is 108, 150 for a 50-year-old, and 216 for a 60-year-old. And then so you're somewhere in between. It's going to be in between those numbers. And let's say in 5 years, this is how much you have paid. 6,000 if you're in your 40s, 9,000 if you're in your 50s, 12,960 if you're in your 60s. So I'm going to go very fast on these numbers, and you can see the difference, because the point is not to show every specific one, but I want you to see something very interesting. So if you're in your 40s, actually in your 60s, by the time you're 80, you already reached the amount of 51, 8,040. So you just went a little bit over your benefit. But because the life expectancy is anywhere from between 75 and 85, for men it's a little less. So that means you're 80 by the time you kind of reach that amount. Okay. Now, if you're in your 50s, by the time 30 years later, by the time you're 80, now you are about $54,000. So you're a little bit over the total amount of the benefit, but again, you're 80 by then. Now, if you are in your 40s, then also by the time you're 80, you just went over the $50,000. So you can see what's happening here, that in all scenarios, the way they calculate those premiums is pretty much based on life expectancy. And they're expecting, in this case, women to live 80. So for men, it's going to be a little more expensive so that they reach that amount by age 75. Approximately. So what happens if somebody comes in already with an illness? Then it's going to cost a lot more because they're not expecting you or me to live to that age because of a pre-existing condition. So this is very interesting when you get to see that, so you can find out if it's better for you to start saving little by little, $50 or $100 a month, or just be insured, because you know it's going to take you anywhere from 20, 30, or 40 years to reach those $50,000. Might as well have those $50,000 already secured, and you know you're not going to spend the money anywhere else. So if something happens, you already have those $50,000 secured for your family. And you know every case is different. If you have any questions, reach out to us and we'll be happy to help you out.